Hello and welcome to ET Markets Smart Talk live stream. Well, my name is Kshitij Anand, and today we'll talk about global investing, which has moved from being a niche idea to a mainstream portfolio strategy for Indian investors. Now, to decode how Indians are approaching overseas investments in 26, what themes are gaining traction, and how regulations are sort of shaping the decisions, we're joined by Nitin D, who is a director and CEO, Anand Rathi International Ventures. Nitin, thank you for joining us today then.
Yeah, thank you. Thank you, Shitish, for having me on this show. Thank you.
Thank you so much for taking the time out, Nitin. And global investing has sort of become very popular in the past few years, especially in India. So, what does the data suggest? The growth is seen in numbers of investors opting for global diversification. If you can just put some thoughts on that as well. Yeah. Can you hear me, Nitin?
Yeah, now I can hear you. Tell me. Yeah,
Okay. No, I was just
I'm
asking,
sorry. There was
global
some
invest.
connection.
Okay. No worries. So I was just trying to understand, global investing has sort of become popular in the past few years, especially in India. So what does the data suggest? What are
Yeah, you're right. So see, India's global diversification is not more than 2 to 3%, and which is
Sure.
very less as compared to the other developed markets.
Hmm.
But you're right. This is changing, and this is changing in a very faster way. We are
Okay.
seeing lot many queries from the domestic Indian residents about
Hmm.
global investments, and now diversification is what they are looking for. Now, this
Sure.
change has happened because of three reasons, which,
Hmm.
according to me, are one is that awareness about the global markets is
Yeah.
increasing, and availability of the platforms is the second big reason. Now, we have many
Mm.
fintech platforms and the regulated platforms also, which
Mm.
gives access to all these global markets. And third
Yes.
is there is a change in mindset also amongst the
Okay.
Indian investors, that they want to try out the new things, they want to explore new themes and new markets also. So these are the three reasons why we are seeing lot many Indian investors also, they want to utilize their LRS limit and they want to invest globally. And needless to say, themes like AI, semiconductor, ESG are actually attracting investors. Okay.
Uh-huh.
One thing that I have noticed is that so there is a LRS limit of $250,000, which allows any
Mm.
Indian resident to
Mm.
remit funds outside India and
Sure.
invest globally. Now, the
Mm.
recent data, since you asked about me, the data, the RBI has come out with, has released the data on LRS, and
Hmm.
I'm very glad to state that the increase in LRS remittances has actually, the increase is 50%, is more than 50%, and the overall 1.7 billion mark is already crossed by
Mm.
Indian resident who actually invested outside India. So we are changing. We are witnessing these changes in the Indian markets.
Mm.
Talking about what are the options that are available there for Indian residents. Yes, of course, Gift City is there, but
Yeah.
then availability of different platforms which are available is actually boosting
Mm.
this thought process, that now the
Mm.
Indian investors, they are actually trying out global markets and investment in global markets.
Absolutely. And as we step into 26, are you seeing a noticeable rise in outbound investment queries, as you also highlighted in in your previous answer? Despite domestic market, or obviously, Indian markets have hit record highs, but US and other markets have actually given more than double-digit returns. So yeah, if
Yes.
you can just highlight on that point as well. Yes.
Yeah, yes, Indian investors are bullish on India. There is no doubt in that, primarily due to the stability in the government and
Mm.
India standing in the global trade, etc., etc. I mean, all these reasons are very well known to the
Mm.
investors. But at the same time, there is a positive shift in Indian investors, that they are now trying to explore and wants to explore something more or something apart from the Indian domestic market. Of course,
Yeah.
the data of the number of demat account opened monthly in India
Mm.
is on the rise, and
Yeah.
this actually shows that more and more investors are joining the investment, or you can say the
Mm.
Indian domestic investment venues and channels. But there
Mm.
is a noticeable interest of Indian investors to diversify some part of their
Mm.
monies into the global markets, and newer options are also now available for Indian investors. Now, what
Right.
has happened is that in June 2022, the global investment limit for mutual fund has
Mm.
actually breached the 7 billion mark, and
Okay.
also
Mhm.
for ETFs also the limit was 1 billion. It is already breached, so there are very few avenues left for Indian investors to actually try
Mm.
out the new products. And this is where Gift City products or the products available on global access platforms like Interactive, and
Mm.
I don't want to name the fintech platform, but there are plenty of fintech platforms which are already available. So, and rise in the awareness among Indian investors are actually
Mm.
helping them to come out with and try or use 10 to 20% of their
Mm.
investable amount in different
Okay.
sectors. Yeah.
Absolutely. Let's also talk about themes, Nitin. In fact, major global themes which are attracting Indian investors today would be AI, tech, clean
Yeah.
energy, healthcare, and commodities. What are your views on that?
See, we need to understand that rupee has already breached 89 levels. Now it has already crossed the 90 levels some few days back. And thanks
Sure.
to RBI intervention, it has actually now came down to 89 levels. So the
Mm.
appreciation and depreciation of dollars actually impacts to the returns for Indian residents as well as for NRS. Now, for Indian resident, it is basically beneficial because if they have invested at a level
Mm.
of say 84, 85 in
Mm.
some 2 3 months back or 4 5 months back, and now
Mm.
rupee is at 89 level, so it has actually benefited the Indian investors, but not.
Right.
This is not the case with NRI investors who are bullish on India and who are
Uh,
actually investing in India. Okay, that
investing
is
in
point
India.
number
Yeah.
one. But at the same time, people or Indian investors are ready again
Mm.
to use global markets for diversification, for creating
Mm.
USD asset base because they are bullish on dollars. So the
Yes.
themes, like you rightly said, AI is the talk of the town. The tech
Mm.
stocks are the talk of the town. The clean energy,
Yes.
healthcare, commodities are some of the areas that Indian investors are actually
Mm.
looking and investing. And
Mm.
the story of Tesla and the story of Nvidia is known to all of us.
Mm. Mm.
And what is happening in the semiconductor chip markets or AI
Yeah.
industry
Yeah.
is what now Indian investors are also tracking, and they are investing into all this market. But at the same time, I would like to caution investors that leverage ETFs, which are available on global platforms,
Sure.
crypto ETFs, derivatives, and
Mm.
all these products should be avoided, at least for the beginners who want to invest or diversify into global markets. But of course,
Mm.
AI and the semiconductor, ESG, commodities, all these
Mm.
are good things. And one more product which comes to my mind is the gold related ETFs and all.
Sure.
If it is available on global access
Mm.
platform, of course they should look at, because the way gold has behaved in last 3 4 months, now it has actually yesterday it crossed
Yes.
the level also. So these are
Uh,
the things, these are the sectors that they should look at, and themes that they should look at.
ab-
And now options are available for them through Gift
Absolutely.
City and the other platforms available for Indian
Absolutely.
investors.
AI and the tech are the two themes single-handedly, push the U.S. markets to record highs. So, yes, we've seen plenty of action around this space. But you did mention about the LRS, that is the liberalized remittance scheme, where the limit is around about $250,000. Any key regulation that one must watch out for, apart from, yes, currency risk is definitely there, apart
Mhm.
from that, any other things that investors can
Yes.
watch out for?
Yes, this is a very good question for Indian residents who are not in the country. And to highlight that any Indian resident with a valid PAN card can transfer up to $250,000 outside India under
Mm.
LRS scheme of RBI. Now,
Sure.
the purposes could be various purposes. For example, if your kid is traveling abroad, or if you are traveling abroad, or you are buying property abroad, or you have
Uh-huh.
some medical related expenses outside India. So there are total 77 purposes or purpose codes under which any Indian resident in a financial year can
Mm.
send $250,000 outside India. And one
Mm.
purpose code is S0001, which is for
Okay.
investment outside India in global markets. So whenever a Indian resident wants to utilize his LRS limit
Mm.
for investment into global markets, he will have to use this purpose code,
Mm.
and they can very well transfer their funds from their savings account to anywhere outside the world, or even to the gift city. But
Mm.
as I mentioned, the maximum limit per year per financial year is $250,000. So
Mm.
resident India is bound to follow this limit. They should not cross this limit in a financial
Mm.
year. This is the first thing that they should be aware of.
Mm.
The other regulation which the Indian investor should be aware about is that anything that they send, any dollars that they send
Mm.
from their savings account to outside India under
Mm.
LRS for global investments needs to be utilized within 180 days. So so on 181st day, if the
Mm.
unutilized amount should be credited back, or should be will be sent back to their savings account.
Mm.
So the investor should be aware about this too. The
Mm.
third thing is that applicability of TCS, the tax collected at source. Now,
Right.
last year the budget actually came out with this particular regulation that any
Mm.
Indian resident sending money outside India
Mm.
under LRS, they will be exposed to 20% of taxation, which is TCS,
Mm.
if the amount is more than 10 lakh rupees. So,
Sure.
so if at all any Indian resident is utilizing LRS and transferring funds above 10 lakh
Mm.
rupees, then they are exposed to 20% of the TCS. Of course, this
Mm.
TCS or can be treated as an advanced tax,
Mm.
and can
Mm.
be
Mm.
taken as a rebate at the time of filing up of a
Mm.
income tax by the Indian resident. Of course, this TCS is not applicable for certain purpose code for student related and for medical related
Mm.
expenses outside India. This is not
Sure.
applicable. The other thing, because LRS involves conversion of INR to dollars,
Mm.
and sending money outside India, the returns of investors can
Mm.
be highly impacted by the currency movement.
Sure.
Apart from the LRS, the Indian resident should also
Mm.
consider or know the currency appreciation or depreciation at the time of investing
Yeah.
outside India.
Absolutely. And how should sort of investors navigate the compliance, taxation, and reporting when putting money in overseas assets?
Yeah. So yes, you. This is again a very valid and very relevant question
Mm.
in today's scenario, when I'm seeing lot
Mm.
many Indian
Mm.
residents are venturing into global markets for their investments and
Mm.
diversification. They should be aware about what are the taxation applicable. So for Indian resident, the long-term capital gain and short-term capital gain taxes are applicable
Sure.
if they are investing outside India. Once
Mm.
they get money back to their savings account, they will have to file their
Mm.
taxes as per their income tax slab. The long-term capital gain is taxed at 12.5%, and
Mm.
short term
Okay.
is as per the income slab of the investor. That is point number one. If
Sure.
the investor is, say, investing into global markets or global stocks,
Mm.
then if the stock comes out with corporate action or dividends, then DDT, which is called as a dividend tax, is also
Sure.
applicable for Indian investors. Good
Mm.
thing is that the investor is not I think the good thing is that investor now are aware about all this taxation also. This is also what I'm seeing, that they are aware about the taxation, they are aware about the
mm,
DDT and the other taxes which they are supposed to pay, and they
mm,
also need to disclose asset under the Schedule FA, that is
mm.
foreign investment or foreign assets, if
Okay.
the investment is done from India. Uh,
Mm, mm.
but good thing is that this is not applicable in case of if the investor is investing into gift city products.
Okay.
Investors are subject to the dividend tax that I have already mentioned.
Yes, yes, absolutely.
Yes.
And how much you could say average Indian investors' portfolio should ideally be allocated to global assets in 26? I think you did mention about 15 to 20 odd percent, but anything else you would like to add on that?
Yeah. This so Indian investor, what I am seeing is that they want to try out global markets. They want to try or invest into global markets through various channels
Mm.
that are available and products that are available. But then
Ah,
they are still bullish on Indian markets. Okay, so
mm,
majority of the chunk. Their investable amount is basically
mm,
invested into the Indian market through various
mm,
stocks and mutual fund and the other Indian products which are available. But 10 to 20% is what I'm seeing that
mm,
they are investing, or they should, that is what I recommend, that they should try out with 10 to 20% for the beginners
okay.
in global markets, and the people who are already investing into global markets, they should look at
Mm,
increasing their investable amount to say 20 to
mm,
30% into global markets. But at the same
yeah.
time, they should have a long-term horizon, and
Ah,
they should avoid churning of stocks, or you can say portfolio, and
mm,
they
mm,
should do the typical, booming industries like AI,
mm,
semiconductor, or blue chip stocks that they should
ah,
and prefer ETFs is what they should do, and they should probably avoid crypto and all. This is what my personal view is, but uh,
okay. No
yeah.
worries. Absolutely. And I'm sure the next question would be, okay, fine, you said that investors can look to allocate 10 to 20% in global diversification. But the next important question is which markets to tap in the year 26? Is it US, Japan, Europe, China, or any emerging market?
Yeah, I mean, we cannot do away with US market. I mean, the person who wants to invest globally will definitely have a US market and the US companies in his mind. So,
Sure.
so one recommendation is that they should look at investing into US market, US stocks, and all these
Mm,
new things which are there in US. But at the same
mm,
time, the Indian investor should also look at China and
mm,
Japan as other markets. And there are some products which actually allows them to invest into all these the emerging economies, or you can say
okay.
US
Mm,
markets and US ETFs. So the products are available for them. LRS limit is already available. They are aware about LRS limit and what is the
sure.
process of. Now banks, they
Mm,
have digital platform also to transfer funds. So previously it
yes.
used to happen when I was with bank. I was with some
Mm,
major banks. It was all
mm,
manual process. Now it is not the case. You can transfer funds with just
mm,
a click of a button. So that is
yeah.
also solved. $250,000 is the limit,
Ah,
and this markets are available. So what I feel is that China, Japan, and some emerging economies should be considered for
mm.
investment, without ignoring the the US market, of course.
Absolutely. Well, on that global note, great insights as always, Nitin, and thank you for sharing your perspective on how Indian investors can approach global markets in the new year, that is 2026. Thank you so much for taking the time out.
Thank you, Kshitij. Thank you,
Right.
thank you.
Thank you.